Hello and welcome to Tax Tip Tuesday. If you are new to my page, welcome. I am Chastity Grady. I am the owner of Grady Tax Plus, where I help service-based providers who are new in their business understand their business structure, their taxes, and keep their finances organized, okay? And so today we're going to talk a little bit about all three on Tax Tip Tuesday today. So today's topic is how to pay yourself in your business. How to pay yourself in your business, okay? So if you like my Tax Tip Tuesdays, please give this video a like, share this video with someone who needs to know how to pay themselves, okay? Someone is struggling and they don't understand anything about this topic and they need you to share this video with them, so definitely share this video, okay? So before we go ahead and get started, I just want you to kind of understand when it comes to paying yourself, okay? There are certain ways that you need to record paying yourself in your business as far as like on your financial books. And there's just a certain way as far as like the logistics of actually receiving the money, okay? And so that's what we're going to talk about today, okay? We're going to talk about how you pay yourself and the logistics in regards to what does it look like in your business on your financial books, all right? So let's talk about business structure, because business structure is important in establishing how you should pay yourself, how you go about paying yourself, okay? Different business structures determine how to receive payment, okay? How to receive payment for the profit in your business, for making money in your business, all right? So I'm gonna start with the bottom up, okay? And just take this as general guidance, all right? Anything I provide to you in this video is just gonna be general guidance, all right? So talk about partnership. So if you're in a partnership, then there is a certain way that you have to pay yourself, or it has to be called something else, all right? It's called a guaranteed payment, all right? When you are in an S corporation, you do put yourself on a payroll when you're in an S corporation, and you do receive a W-2 for that, all right? Now, the most common one that I want to talk about today, that I want to focus on the most today, is when it comes to you being a sole proprietor, an independent contractor, or a single member LLC or PLLC, okay? Sole proprietor, independent contractor, and single member LLC. So when you are just you're the only person in the business, right? And you're making money. A lot of people think that, or people tell them that you need to put yourself on payroll, and that is not true, all right? When you are a sole proprietor, independent contractor, or you're a single member LLC or PLLC, and PLLC is for professionals who have a certain license in order to operate their business, right? Like counselors, for example, or a doctor. You do not put yourself on payroll, all right? You do not put yourself on payroll. And one of the reasons why you don't do that is because in the eyes of the IRS, you are considered a disregarded entity, right? So this means that you, even though you might be separated from your business from a legal standpoint, like if you have an LLC, but when it comes to taxes, you're filing your tax return with your personal tax return. It's combined all together. So you'll have your 1040, and then you have all different schedules, and one of those schedules will be a Schedule C or a Schedule E for your business, all right? Now, when you are a sole proprietor, independent contractor, and or a LLC, you do not get a tax deduction for paying yourself, okay? You do not get a tax deduction for paying yourself. You get a tax deduction for paying others in your business. If you give someone a 1099 or a W-2 for being an employee, you get a tax deduction for that, but you do not get a tax deduction for paying yourself as a sole proprietor, okay? Whatever the net profit is in your business, or some people begin to pay themselves when they don't have a net profit, which is fine, that's your choice. The net profit in your business is what you can pay yourself out of, okay? Or what you should pay yourself out of, okay? And that is what we would call a owner's draw, okay? You own your business and you're going to withdraw the money that you made in the business. You're going to withdraw it and pay it to yourself, all right? A lot of people think it has to be some kind of fancy way. Oh, I have to like set up some kind of system to automatically pay myself or something like that. And that's not true. The only thing that you need to do is decide, okay, if I made, let's say for a month of August, let's say you made a net profit of $2,000. and you want to pay yourself $1,000 out of that net profit, then what you would do is you would take the money from your business, in your business account, transfer it to your personal account. All right, you just do a transfer and you record it as a owner's withdrawal. Okay, and you can make a note that that was you paying yourself. There's nothing else fancy or anything you need to do, because remember I mentioned that you do not get to take a tax deduction for paying yourself. All right, I've seen tax returns that I didn't prepare, or I would see information provided to me from other people where they are putting in their expenses, $12,000 for paying themselves. That's $12,000 that you don't get to include on the tax return as a payment to yourself. Okay, so you don't put yourself on payroll, and you don't get to take a tax deduction. All right, so but what you can do is the money that, one of the positives I would like to say is that the money that the net is, whatever the net profit of your business, after you've paid taxes on that net profit, then guess what? The remaining of that money is fair game. All right. If you wanted to take the whole profit as, income to yourself, you can. I don't advise that, but it's fair game. You won't be taxed on that money ever again, because you already paid taxes on it, or should have paid taxes on it after you filed your tax return. All right. So just to recap really quick, whenever you are a sole proprietor, a single member LLC, or independent contractor, you do not put yourself on payroll. Okay, you do an owner's withdrawal in order to pay yourself. And a lot of people don't understand, like, what does that look like, because they don't have their bookkeeping together. When you have your bookkeeping in order and in place, once you recognize a transaction as you transfer from your business to your personal account as an owner's withdrawal, your bookkeeping recognizes this as something that does not go into the expense account or into your expenses. When you look at your profit and loss statement, it will be as it never existed, because that, like I said, that is not a tax deduction for your business. And so if you don't know like what the net profit is in your business, and you want to be able to visually see, how do I really do this? How do I really know what my net profit is, so I can know how much to pay myself? Then you want to make sure that you are keeping track of your income and expenses coming in, really keeping track of them with a bookkeeping software. That's the best way you can see it, because then you can generate reports. You can generate profit and loss statements, balance sheet, cash flow statement if you need it, in order to see what is really going on with the business, with your business, the health of your business, in order to determine what you should be doing or should be paying yourself, or what you should not be paying yourself, because you don't want to pay yourself if you're in the red, if you can stand it. All right. So if you want to learn how to manage your own finances, then definitely click the link that I have attached to this video so that you can learn how to do your own bookkeeping. Join the waitlist that I have out. If you're someone, you're like, you know what, I should have been doing this a long time ago, I'm not trying to join the wait list, can you help me today? Then I will leave a link in the comments so that you can schedule a consult with me, so that we can just go right into it. My bookkeeping wait list is really for people who want to learn how to do it in the group setting, but I already do one-on-one, where I'll teach you one-on-one on how to learn how to do your own bookkeeping. Okay, so share this video out. Let me know if this was helpful to you on understanding how to pay yourself in your business. Again, you don't put yourself on payroll. You do not get a tax deduction if you are a sole proprietor. If you are a single member LLC or independent contractor, you do not get a tax deduction for paying yourself, which is why you don't put yourself on payroll. You recognize that as an owner's withdrawal from your business whenever you do take the money as a payment to yourself. And like I said, you only get a tax deduction if you are paying an employee, or if you are paying an independent contractor, then that's what you can deduct as tax deductions on your Schedule C tax return. Okay, so that is all that I have for this video. If you have any other questions about anything I said in this video, then definitely leave me a comment, and I will see you in the next Tax Tip Tuesday.